So inevitably, after some level of success in anybody's mortgage business, they're going to look to increase their volume. Okay. And now some loan officers are going to look at this as, how can I increase the volume of realtor transactions that I do? But there's a lot of loan officers out there that start thinking outside the box in their business at some point and say, how do I increase the volume of transactions that I do without increasing the amount of relationships that I build with real estate agents? This is where they end up landing on a high volume lead source like internet leads, for example. It's no secret that internet leads are a dime a dozen in the mortgage industry, and that a lot of loan officers really struggle to make them a component of their business, a way of generating revenue in their business. And so what I wanted to do is I wanted to take from my perspective, my experience, what it is, why it is that loan officers struggle to make that transition from working with realtors to working internet leads and ultimately making that a profit center for their business. Why is it that loan officers struggle so much with internet leads? Why is it that the idea of generating internet leads, of having an endless supply of leads that we can then plug into a system and convert into a closed loan and take that profit, like why is that so appealing? But why is it that it doesn't work that way in real life most of the time? Why is it that most loan officers that invest in internet leads, they end up walking away with less money than they went into their lead agreement with? Okay, why is that? Well, first off, we have to understand the most basic underlying fundamental of this entire video, which is basically that in order to grow your business, you need two things. You need a source of leads and you need a process for converting those leads. Okay, really simple. I don't want to make a big deal out of this, but look at, for example, your agent relationships. Okay, what is your source of business? It's your agent relationships, right? Or it's agents, real estate agents in your market. Okay, what is your process for converting those agents that are strangers at one point into closed loans for you, into agents that are sending you referrals on a consistent basis? What does that process look like? Okay, those are the two components of any marketing campaign, specifically in the mortgage industry. Like the two most fundamental building blocks is, where are you getting the leads and what's your process for converting them? Okay, so that's kind of the fundamental, the baseline of this. But diving further into this, and if I'm looking down, it's because I got these notes. I'm trying something new with recording this video. So forgive me if you catch me looking down. It's because I'm looking at my notes. I don't have this shit memorized. Anyways, first off, for source of new leads, right? Most loan officers think that this is their problem. And to be honest with you, it is at first, right? For every loan officer that ultimately takes that step into wanting to find new ways to generate business for their business outside of the traditional mortgage marketing norms of soliciting referrals from real estate agents, for any loan officer that is exploring this, their number one problem is that they need a new source of leads. However, as soon as they get those leads in the door, their number one problem becomes the second part of this, which is the process for converting leads into closed loans. Okay, good. Super elementary so far, super basic. Don't think that this is what this video is going to consist of. I promise you we're going to dive deeper, but we have to lay these ground rules. We have to lay these fundamentals in order for you to understand where I'm coming from with a lot of this stuff. So what I want to talk about is the dichotomy that exists between lead volume or potential lead volume and intent or ease of conversion. Right? So two different ways to look at both of these things. So volume, lead volume, you can look at this as either volume or scalability, right? That's another way to put the volume component, okay? The other side of it, again, is either going to be ease of conversion is one way to look at it, or intent. How close are they to actually pulling the trigger, submitting a loan application, and more importantly, buying a house or refinancing or whatever it is that you're targeting at that time, okay? These two components, we need to understand the correlation that exists between the two, or the negative correlation that exists between the two, so that we can have proper expectations going into any marketing campaign that we're running. What I want you to look at, I want you to look at this graph. I'm gonna throw a graph up here on the screen. I don't have it right here, so I'm gonna pretend, right? So you have a graph. On your x-axis of this graph, you have intent. You have like the buying process, right? Where the very far end of the x-axis is closed loan, and the beginning of it is initial interest, we'll call it, right? Then you have your y-axis, right? Up and down. Y-axis, this is where you're gonna have volume of available leads, is what we're gonna call that, volume of available leads, okay? And so what we're going to find on this chart is that when you're far away from the sale, when you're far away from the closed loan, the closed transaction, The further away you get from that, the higher volume of leads that are available. Okay, this is the same in pretty much any industry. Okay, but in mortgage, I know this from firsthand experience. This is the case. Okay, the farther away you get from the sale, the more potential volume of leads there are. Okay, now another way to look at this is like a funnel. This is the same reasoning behind a funnel. Okay, so throwing up another diagram on the screen, just looking at a funnel, right? Now, a funnel is wider at the top because it means you have more available prospects. Now, the further down you go in the funnel, that represents going through the buying process until ultimately at the bottom of the funnel is your closed loan, right? So the higher up you go, the more potential borrowers there are. And then the closer you get to that closed loan, the less there are, right? We've got to understand this. We have to understand this at its fundamental because most loan officers have been conditioned to only chase the leads that are at the bottom of the funnel, to only chase the leads that are at the peak of their intent, that are like ready to pull the trigger right here, right now. Those are referrals, okay? These are obvious. Of course, these are great. Like any business owner that would not take as many of these as they could possibly get would be an idiot. However, it's not nearly as scalable, right? The potential volume, if we look at the funnel or we look at that inverted chart, either one, the potential volume is just not there to be able to take that next step in your business if you've reached the point where you said, hey, I'm tapped out on my referral marketing efforts and I want to scale my business beyond that, okay? So again, there's nothing wrong with chasing referrals. In fact, it is the best possible lead source. However, that's also where there's going to be the lowest volume of opportunities available for you. And this is where the problem is. And so what happens is loan officers transition into generating leads or buying leads is they don't reset their expectations. They don't recognize that this is now a completely new business model, that this is now something that is going to require a completely different level of work, a completely different process, completely different dialogue. This is a new business channel that requires a completely new perspective in order for it to work. Why? Because the farther away you get from that closed deal, right, the lower intent you get, the higher volume of leads are available. So when we go buy leads from a lead vendor, unless we're buying leads from Zillow at $400 or $500 a pop, odds are we're getting leads that are pretty far away from pulling the trigger and buying. Now, when I say pretty far away, I want to clarify something. I do not mean time. I do not mean that these leads are 6 months out from buying a home. I don't think it makes a whole lot of sense to invest my marketing efforts as a loan officer into leads that are 6 months out, right? That's what automation is for, and we'll talk about that later. What I mean is like the mental path that every lead takes before buying a home, that every home buyer, every prospective home buyer takes before buying a home. Most of the time, this path is obstructed by a lack of information. Okay, this is the most critical component of working internet leads, is understanding this concept. Most of the time, people have not bought a house, not because they said that they're going to buy in 6 months and they're waiting out that 6 month timeline. They're holding off from buying a house because they're not ready yet, or they don't think that they're ready yet from a literal, practical, like, my application, my profile as a borrower is not ready, or it is ready, right? I either have credit issues or I'm in a new job and I think that that's going to hold me back from being able to close because somebody told me that you have to be on your job for 2 years or whatever it is, right? Typically, the mental path from interest and expressing interest in a mortgage and closing on a mortgage is closed by access to information, not by time. Okay, so when I say somebody is far away on this intent, on that curve, right? When I say somebody is far away from closing, I don't mean that they're a long time away. I mean that mentally, they still have multiple steps to check before they're ready. Number one, and the most common being, can I actually qualify? Or what do I need to be able to qualify? Okay, so this is important to understand here as well, because I'm not advocating that people invest a ton of time into leads that are years out from converting, or even 6 months to a year out from converting. We are looking for the business that's ready right here and right now. We just have to follow a process to identify those and help kind of massage them along and get them through the process comfortably so that they can end up becoming one of those closed loans, okay? Again, circling back, most loan officers are conditioned to work the referrals, which means their skill set does not automatically transfer when they start working with internet leads. This can be really, really discouraging, guys. When you are so used to being able to talk to a real estate agent and you're known in your market. And so you're leaning on some of that notoriety that you already have in your market. And those conversations just flow just flow, right? They're just smooth like butter. And you walk away from those with referrals or with opportunities to follow up and get referrals later. And you've done that enough times, like your expectations are right here. And then when you go into a conversation with a lead or with a prospect from the internet or from another high volume lead source, all of a sudden the results don't align with your expectations. And that's because it's a completely different lead source. They are at a completely different place in the buying process. Even comparing borrower to borrower, if you get a referral from a real estate agent, right? Just looking at the referral. Most loan officers, when they get a referral from a real estate agent, it's like, all right, get on the phone, collect the app. Here's what we need. Let's go, right? That's typically how a referral works, okay? However, in this case, you don't have that trust that was established with the real estate agent to lean on. And so if you start talking to them like that, they're going to pump the brakes on you. And this is where so many loan officers get so frustrated with converting internet leads. Loan officers in particular that have been really successful with agent business. Okay, so what does this all mean? What actually has to change, right? On a generic level, right? Your expectations have to change, your habits have to change, your systems and processes have to change, right? In order to work internet leads effectively or work a high volume lead source effectively after you've transitioned from working with realtor referrals. But we can dive deeper into this. There's a lot to unpack here, but a few items that you're definitely going to need to change if you want to be successful with a high volume lead source like internet leads. Okay. Number one, you're going to have to get good at closing. Okay. This sounds weird. Okay. Most loan officers don't associate the mortgage business and closing unless you're in a call center sweatshop environment, which, by the way, call centers work consumer direct leads. They're good at closing, starting to see the correlation there, right? You're going to have to get good at closing. Now, what does closing mean to me? Closing to me means getting people to take the step that they would already be taking if you were a trusted advisor, even when you're not a trusted advisor yet, right? That's basically it, okay? You're not trying to get them to do anything that they didn't want to do or that they don't already have plans on doing at some point. You're just sifting through the surface level objections, the things, their ego, right? Their defense mechanisms. You're sifting through that to get them to take the action that they would take, assuming that you were referred to them by their family member. Right? And that's the art of closing in the context of internet leads. So you're going to have to get good at this. This is not something that most loan officers are used to doing. They might be used to doing it with real estate agents, but then as soon as they get in front of a borrower, all of a sudden their habits change, their thoughts change because they're used to working referrals from real estate agents and they're not used to crossing that bridge, that trust bridge on their own. There's a really good book for this is the Conversion Code. Conversion Code is written by Chris Smith. He just came out with a second edition in 2022. Great book. I've read it twice. Changed my life the first time. Second time was equally valuable to read. So definitely recommend that book if you're looking at doing this. The Conversion Code is awesome. Great way to kind of understand the psychology of the internet buyer and understand how to navigate that as a salesperson. All right, next, you're gonna have to get really good at leveraging technology in your marketing. And when I say really good, I mean really good. You should become what you probably consider at this point. If you were to look at the amount of knowledge that you need to gain in this area and the amount of experience that you want to gain in this area, you're probably thinking expert status, right? Mortgage marketing automation expert, okay? It's not that hard. It's not that complicated, okay? It's stuff that you've been doing your entire career on the realtor referral side, however, digitized and at scale, okay? So what does this look like? Let's start with the obvious, okay? Why is Rocket Mortgage, why is Quicken Loans, why are they the gold standard for converting internet leads? If you don't know that, if you want to get an idea of some best practices for converting internet leads, submit an online lead inquiry to Rocket Mortgage and watch them blow up your phone. Get on the phone with them. Resist them when they try and collect that 1003. Then give them give them a partial 1003, something, right? Get as far into that process as you can comfortably before you're doing stuff that you can't take back, obviously, so that you can see the process that they're taking you through, because they're really, really good at this. But one way that they've been able to get really, really good at this is through the use of not only technology, but technology in conjunction with a high volume sales force, okay? The technology that we use as mortgage marketers, for independent LOs, for mortgage offices, is not going to be the same that Rocket Mortgage is using on their side. Rocket Mortgage has their entire process and all of their technology built out around call center reps, basically on butts and seats that are making outbound dials consistently, that are performing live transfers, etc. This is not something that you're going to scale very easily, okay? But what you can do is you can set up follow-up automation, right? Follow-up automation is great. If you don't use it already, you should be. Empower LO, little shameless plug there. Empower LO can help you out with that if you check out empowerlo.com. But what you need is something that's going to be able to allow you to drop leads in there on a programmatic basis. So you don't want to manually add any leads in there. You want leads to be automatically added into the system. And then you want to automatically send text messages. You want to automatically send emails, ringless voicemails, pre-recorded videos, right? The works. You got to get really good at this component of it. That is the bare bones minimum when it comes to leveraging marketing tech to be good at consumer direct marketing as a loan officer, to be good at working high volume lead sources. The bare minimum is going to be to leverage a marketing automation system and make sure that all of your leads are getting automatic responses. What else though? What else do you need to get good at? Well, you got to get good at using social media. Okay, adding your prospects on social media and then consistently publishing content and consistently staying in front of them is a great way to increase your conversion after you've generated that lead. A great way. We recommend this to our clients. Any clients that we have, or any clients that we have that are active on Facebook, we say, hey, find those leads, find the leads that you're working, or find the leads that you're sending applications to, give them an ad and then stay in front of them. Give them an ad, add them on Facebook, whatever you want to call it, add them on Facebook and then stay in front of them. But now we have Instagram, we have TikTok, we have Snapchat, like all of these, the barriers that used to exist around personal and business, they're blurred entirely, they're gone. And so you getting good at these social media platforms as a means of staying in front of your prospects is going to drastically improve your conversion rate. What else? Email marketing. Email marketing. This goes beyond just like your autoresponder marketing. I'm talking like opening a regular line of communication with your prospects via email. This can be massively valuable to you at the point that you have a high volume of leads. I probably wouldn't focus a ton on this until you've got a couple thousand leads in your database. But at the point that you do, this like email marketing is one of the highest return channels for creating business for any industry out there. Okay. Rocket Mortgage, Veterans United, these guys, Lending Tree even, these guys all make a massive amount of revenue from their email campaigns, and they're not emailing cold. They're emailing people that inquired at some point, didn't convert right away, and are now staying engaged through email marketing. So being able to effectively communicate, open that line of communication with your prospective borrowers and come off like a real person, show some personality through your email marketing would be massively, massively valuable at the point that your database is large enough. What other marketing technologies can we get really good at to improve our odds of converting as many of these high volume, as many leads from a high volume lead source as possible? Facebook ads, okay? Our agency, we run 100% exclusive pay-per-click Google search for lead generation. As far as the top of your funnel, this is what I recommend. I do not recommend running Facebook ads for top of funnel mortgage leads. I think it is a giant waste of time and money. I don't think that they convert at a high enough rate quick enough to make it worth your while. You used to be able to generate leads for $1, $2 a lead in the mortgage space, at which point the argument could be made that you're just filling your database and that's value if you're using all these other practices that we're talking about. That's not the case anymore. You don't get leads for a couple bucks a piece. Now you're paying $5 to $10 a lead for leads that are garbage, for leads that had zero intent. If we have that scale, that x-axis for the graph, is zero intent here, and then closed loan over here, they're definitely hanging out in the zero intent space. So I definitely don't recommend that. However, if you get good with marketing technology, if you get good with Facebook ads, and it doesn't even take that much, it doesn't even take getting good at it, but comparatively speaking to other loan officers, if you get good at running Facebook ads, then you'll learn how to segment your audiences. You'll learn how to feed information to Facebook about which of your prospects are in what stage in the buying process, and be able to run ads that are there just to stay top of mind for your leads that have submitted an application with you, or just to stay top of mind for all of your pre-approvals that you have out shopping, or just to stay top of mind for agents in your area so that they know who you are when they see your pre-approval pop onto their desk. Like, there are ways that you can leverage Facebook ads as a huge bonus to your existing marketing campaigns. And this is just another component of how getting really, really good at marketing technology will help with that process of transitioning from being a realtor-focused loan officer to focusing on some high-volume lead sources and scaling your business that way. My last recommendation is that you're going to have to be more organized than you've likely ever been in your business, okay? Take my word for this. Like, it doesn't take rocket science, right? If you have to be this organized with 50 high-quality, high-intent leads a month that are converting, you know, that 25% of them are converting, right? So let's call it 20 to make, that doesn't make numbers. Yeah, it does 10. Sorry, you like my math there. All right, so 20%. Say you convert 20% of the referrals that you get into closed loans during month one. And so that means you're getting 10 loans from 50 referrals, right? Well, you probably have to be pretty organized to stay on top of that. Now imagine instead that you have 300 leads coming in and you have 5 more steps in the buying process. You can imagine how much more important it is to stay organized with this. I would not recommend this, but I do know loan officers that do this. A lead tracking spreadsheet. Again, not a huge fan of spreadsheets. All right, we run a mortgage marketing automation platform. Like, of course, I'm going to suggest that you stick with a CRM for this. Here's the deal, guys. The value of every single piece of marketing that you put out, every email that you write, every video that you record, every flyer that you create, for God's sake, like any piece of marketing that you put out, the value goes up exponentially depending on the number of contacts that you have in your database, but only if those contacts are organized in such a way that you can send them relevant messaging. If they are not organized in a way where you know who's applied with you, who hasn't, who had credit issues, who's self-employed, who's pre-approved, who's out shopping. If you don't have a way of organizing all of your leads into those categories and seeing where they're at a glance, you're never going to get out of your high volume lead source what you could be. So not only like stages, not only pipeline stages, what's another way that organization is really important when it comes to working internet leads or working a high volume lead source? Other than separating into stages and how far they've gone in the process, what's another way that you can stay really organized with your lead capture and with your lead management that'll help you long term? Well, starting out, you're not going to know what metrics are important to you. You're not going to know, like, you don't know what you don't know, basically, right? Like, you don't know which answers to which lead forms are more likely to lead into a conversion. You might think that 740 plus 740 plus self-reported FICO is the one that's most likely to convert into a closed loan because they have the highest credit score. But what if 700 to 720 is actually the sweet spot? You'll never know those things if you don't go as far as to make sure that you're mapping all of the fields from your lead form to a field inside of your CRM, so that later when you have 20, 30 closed loans from a lead source, you can go back in and you can see what is it that all these guys answered on the lead form. Like, what's the most common answer for household income? What's the most common answer for credit score? Like, know those metrics up front. You might not think that they're important getting started right away because you're like, well, I know that this isn't really accurate anyways. Like, we'll just wait until we get the 1003 and we'll import that data into it. Wrong. Don't do that, because what they answered on the lead form is a data point that you can use to then later predict who is more likely to close than the other. And so this is really valuable way to stay organized. An example of how just starting out with the mindset of like being as organized as possible on day one can pay huge dividends later on, even when right now you don't necessarily know how you're going to use the information. If this seems like it's a ton of work, it's because it is. If this seems like you have to put a lot of thought into it, it's because you do, okay? It is a completely different business model than what most loan officers are used to. If you want to ask me if I think it's worth it, 110% yes, because just imagine that you solve all of these problems for converting high volume leads into closed loans. Okay, just imagine, just picture on the other side of this that you have ironclad processes in place for converting internet leads into closed loans. So what's next after that? It's really easy at that point to then go pick another lead source. Guys, we have clients that are shopping us, shopping us constantly, shopping for new lead sources constantly. Why? Not because our leads aren't good enough, but because they have their processes so dialed in the middle of the funnel that they can now focus on how do I increase that input, or how do I increase the ROI of that input, knowing that no matter what I put into the top of this funnel, like, I'm gonna have the best shot at converting those leads, okay? That's where you make a transition from being a loan officer to really being an independent business owner. Lastly, remember, LOs that are successful with a high volume lead source, they're successful because they understand the dichotomy that exists between the intent of a lead and the volume of opportunities that are available in the market, okay? If you understand that and you adjust your expectations for how easy it is to convert a lead based on the volume of opportunities that you have available, and you find that balance that's right for you, you will be successful with consumer direct marketing, I can guarantee it.